S&P 500 index, after hitting all-time highs, starts to pull down, and today ends up having a red day, guys. Now, there's a few things that pulled it downwards, and before we jump into this, I want to say welcome to all the first-time viewers and investors. Welcome to the channel. Invest for Tomorrow. To all the subscribers, welcome back. And all I ask for in return is for you to smash that like button to let me know you watch this video. Helps out the YouTube channel, and it lets me know you appreciate the time and effort I put into making these videos. Now, the pullback today was pretty subtle, and on the 30-minute, I had stated that we were looking like we were on our way to overextending, that we might pull back a bit, and on the 1 day, it seems like we have a little bit of room to continue going upwards. Well, you could see here that we're already on our way back down. The question mark is here, are we going to pull down a little bit and bounce off of it and then overextend before the real pullback? Because a pullback is coming, guys, and there's more analysis ratings and experts stating this, and we're going to look at an article in just a moment, and that's something that I do want every single investor and viewer to be aware of. And all it does is let us know that opportunities are coming, guys. That's what happens when there's pullbacks. I always say this. Every single pullback is a setup for the next bull run. This pullback here was a setup for the next bull run. You see it right there. Pullback, next bull run, pullback, next bull run. I've said that every single time, but we want to be aware and prepared for them so that we don't get all in that uncertainty and fear and doubt of any position that we're holding and end up getting shaken. And I like to call it our stolen shares, right? That's what I call it when you sell because of FUD, right? Anything that has to do with fear, uncertainty, and doubt, and the stock market's pulling back temporarily. It's not a crash. It's like a small correction or a healthy pullback. And then an investor, as myself, sells because of FUD. I always call that the stealing of shares, because those shares are being stolen from you because someone's buying them when you're selling them. So think about that. And at those lows, they're going to ride it right back up. So it's not about, buying more at the dip if you feel uncomfortable. It's about analyzing your conviction. What is it that you're doing? And you only lose money when you're holding long-term stocks, not short-term. Short-term, you do lose money because you sell at a loss. Or if you don't sell, you can lose more than you anticipated, right? So short-term, it's a different strategy. But long-term, you don't lose money in investing until you sell, if you sell at a loss. So if you don't sell and it's at a loss position, you won't make money till it finally comes back up. So you don't lose money is the saying when you're holding for long-term opportunities or a swing trade of a few months, or your conviction is there and you're willing to buy the dip. You only lose money when you sell, especially when it's down. So the best way to avoid selling is keeping your conviction high, doing your research, and understanding in what position the stock currently sits in what sector it's in, how it's being affected, and is the S&P 500 index going to be a correction or crash, right? So on the 1 day, it's pulling back. So this is happening a lot quicker than anticipated, and now this leaves that big question mark of, is this going to kind of fight back and forth here or kind of overextend and then fall down, or is this actually the beginning of the pullback becoming clear, right? In a downward trend, like those spikes up, spikes down, spikes up, spikes down, spikes down, So it's super important to start watching this. Now, a lot of investors yesterday commented in my video, and I really appreciate everyone's comments, and that's why we're here talking about this again, because I do want investors to be aware of it. And I want to share with you guys what really pulled back the stock market today, and it had a lot to do with tech, and some of the tech sector and innovation sector like Tesla, Apple, and mid-cap and small-cap stocks fell pretty hard. But Apple and Tesla, they didn't fall too much. They pulled back a little bit, and then they jumped. And they're making themselves look green, but their jumps are really small. Apple's up 22 cents, right? Tesla's up $10. That's nothing, right? That is like on the edge of falling, right? Especially if they overextend. Now, let me show you guys a big stock that actually fell pretty hard. And that was Baba, right? It went into aftermarket hours yesterday falling. It fell today, and then it bounced back up. And it's basically like at break even, right? And now a stock that actually continued to fall and then kind of fought its way back up. And it's actually the one that pulled down towards the end of today making it seem like it has even more room to fall, is Amazon, right? It fell, fought back up, continued to fall, and that's the one that created the catalyst in the e-commerce sector, like Baba, Pinduoduo, Pinterest, to all collapse. And now the thing is, why did it collapse? Well, earnings was great. It has to do with the forward outlook of earnings and also how things are looking moving forward. So if we are reopening, right, Amazon kind of falls into that gap or into that niche of, when lockdowns were happening or when quarantine was happening, or just like not as much that the reopenings out there and people weren't really going to shop at places, they were shopping online. It made Amazon seem more fluffed up, right? And it seems like we're reopening, things are going back to normal, even though Amazon's going to continue to grow as a company in years to come, and it might stagnate at some point. That's what the forward outlook is, that it's no longer the lockdown money, or people will actually go shop at certain places instead of Amazon because now they can go wear a mask, not wear a mask, whatever it is they want to do. So Amazon's kind of pricing these things in, and it could continue to fall. And this isn't going to be a catalyst of like a dot-com bubble, but if this falls significantly, more than 10, 20, 30%, and then Tesla, Apple, and Microsoft, and the big giants, and then the micro and mid-cap stocks in the S&P 500 index follow, then we could be into not just a correction, but a crash. And that's something to kind of be aware of. So I'm not assuming that's going to happen, and I'm not planning on that to happen. I think this is more of a correction, and it's going to be a healthy one. Like I always say, these pullbacks right here are the setbacks and then the setups for the next bull run, right? They're not setbacks if not setups. They set back up for the next setup to run. So every time there's a pullback, that's just the mentality I have. It's just no one knows the bottom, but once the bottom hits and it starts to reversal, the reversal comes back stronger than anticipated, and you can see that in the history of the charts, and you can see that here, okay? Pull back here, bull run, pull back here, bull run, pull back, bull run, pull back, bull run. Now the question is, are we pulling back, or how's this going to play out, right? So I have an article to share with you guys that I don't want you to miss. It's definitely something to be aware of. I talked about how Bank of America looks at things yesterday. They came up several times. I talked about other analysis, talking about the Federal Reserve and some important numbers today that were coming out when it comes to consumer spending. And that is something that came out kind of neutral. It didn't come out too over great or under expectations. It kind of sat sideways. I don't know exactly how that's going to affect the market in a positive or negative way. But technical basis, we are looking like we're pulling back, guys. Especially if this crosses here the MACD on the 1 day and the RSI continues pulling downwards. So this is the article. Investors should sell stocks now as the high risk of new lockdowns in the US is highly likely and could spark a market panic. Okay, now if Amazon's falling as fast as it fell, right, and it reacted as fast as it fell, I don't think lockdowns are something that's gonna happen, because they're pricing in that lockdowns are kind of over, right? That we're in the reopening stage. Not sure, maybe this could be an opportunity what's forming here with Amazon, right? If lockdowns do come back and all the different stocks that have to do with lockdowns. But this is a very bearish statement here, and more than anything that stands out to me is investors should sell stocks now. Why? Because if you watch my video yesterday, that's exactly what Bank of America was saying. Now we have another expert stating this, okay? Stating how it's highly likely, the variant, and also that stocks are a little bit frothy and they're overextended, which we already talked about. I don't want to go into much detail. I just wanted you guys to read this and see this for yourselves, that this is coming out left and right. Now, whether people believe it or not, I've stated in yesterday's video, retail investors tend to ignore these signs, and especially with how, Main Street, Wall Street, the apes, the bulls versus the hedge funds and the retail investors and so forth are all kind of colliding. But this is how the market has moved and ran for years before this whole entire movement. and these articles are being posted by these writers, whether it's true or not, or it instigates sell-offs or not. At the end of the day, the big whales, they don't listen to everything that these articles say, but they prepare for it. And that's what I'm here to share with you guys, that I've noticed that even though retail investors ignore these things, they do tend to happen sometimes, whether it's temporary or long-term. It's just good to know both sides. Whether we believe it or not, it's just good to know both sides. And I really appreciated yesterday in one of the comments down below in the video that somebody stated it's very easy to talk about how bullish the stock market is, how things are looking, and how great this stock's going to go up. And I'm actually talking about the opposite. I'm talking about, the parts that are a little bit not as exciting and not too fun to talk about, and we don't even want to be aware of, but it's important to be aware of it. If you're an investor, you need to know both sides. Whether you don't want to or you do, you need to know both sides. And this is exactly what Bank of America was saying. Now we have another expert saying this. If I continue to see this pattern, whether it's true or not, it could become a reality because they're sending it out so much that the whales, remember the whales, are the ones moving the markets. And a lot of people say, well, how do they do that? And they have billions of dollars that we don't have access to. If you have a bank account, hedge funds, this is how it works. Hedge funds, it's mutual funds and ETFs, and a lot of people buy into them because they want to invest a little bit more safely and kind of have a little bit more diversification. And big dogs tend to do that. Hundreds of thousands, if not millions of dollars, go into ETFs and mutual funds, and that money then gets used however the hedge fund and the institutional investors want to use it. Then also some institutional investors are banks. If you have a bank account, whatever money sits in your bank account, whether it's $1, $100, or whatever it is, that money is used by the bank however they want, and 9 times out of 10 it's going into the stock market, and it's going in all collectively. So without even you noticing, you are supporting the cause of how institutional investors and hedge funds work with our money. That's just the way the banking system works. And if you have a bank account and you have a savings, or you have, your total amount of checking or whatever type of account you have with them, even your CDs, okay? While they're paying you a little amount, that's going either to a mortgage, that's going either to a stock, that's either going to an ETF, that's going somewhere. And best believe that if they're giving you 1%, 2%, they're making 10 times that to 100 times that. So it's like unavoidable how they're able to come up with all these billions and millions of dollars, because it just works that way. And that is why I actually pay attention to what the whales might do according to these articles, because the ones writing these articles are obviously Business Insider, CNBC, different news sources, and different articles that are doing article publications. But the ones they're talking about are the whales. Yesterday it was Bank of America. Now it's this analyst right here, an investor, right? Institutional investor and large investor. So when they're talking like this, right, I've come to realize, okay, and this is what happens with most people. You guys can tell me if you disagree with this, right? Some people might have more in their brokerage account, some people, but most people, especially starting out in their brokerage account, have less money to invest with than the amount that they have either in their savings or checkings, okay? If the person has checkings and savings, usually that has a little bit there sitting or equal amount. They're kind of balanced out to kind of work their way through this to actually invest, try to see if they grow and actually grow in their investing journey. But then they also have a certain amount in their checkings and savings, and sometimes that's double the amount in the brokerage account. So I want you to think about this for a second. And the ones that usually have that money are institutional investors and banks, and those people put that money into ETFs. They put that money into individual stocks. They use that as, money to go ahead and sell mortgages, to then sell it to somebody else, even CDs, everything, like I stated. So it's so important that if somebody has double the amount in their brokerage account, right, without even noticing, and the whales are saying this, okay, they're the first ones that are probably going to sell before you can even sell if you haven't already. And if not, they're like literally sending out the message. if you're a bull, right, and you have double the amount of what's in your brokerage in your bank account, that money's being used somehow, some way, and it falls into the stock market, into other investments and other sources that the banks use, right? So if you have double the amount and you're a bull, there's 2 bears in your bank account sitting because the bank has that power. If you're a bear, there's 2 bulls sitting in your bank account, and it's your own money, but the bank uses it while it's sitting there against you. So I don't follow exactly what they say. I don't believe in everything I see, but I do consider it. And that's something I do want investors to understand, because out there everywhere, everyone says to ignore this stuff, don't believe this stuff. I'm not saying you're supposed to believe everything you read, but you do want to consider it, okay? You want to keep yourself open-minded, but not open-minded to be everywhere, if not open-minded to be prepared and aware of what both sides look like. So when it goes either way, the stock market falls and continues to fall, or it consolidates and bounces back up, at least you knew what others were saying and what the whales wanted, and then you can kind of figure it out and say, well, the whales wanted that. It looks like they didn't get what they wanted. But if it goes in the direction that the whales have been talking, they were already preparing for this. And now you're aware, and you're going to understand how to maneuver through those waters. As always, guys, this is not financial advice. I'm just here to share with you guys and enlighten you guys on my perspective, my opinions, and what I see in the markets right now and individual stocks. And I hope that you guys learned something new. Comment down below how you feel about this. And I'm going to share with you guys a ticker symbol you won't want to miss that's presenting itself as an opportunity. And the ticker symbol I mentioned this morning over at the Discord that ended up giving us 10% plus in a matter of 30 minutes. Stay tuned. So the ticker symbol I have to share with you guys today is one that collapsed after earnings, and it's presenting itself as an opportunity based off the charts. Now, this is a great stock to actually start watching, doing more research on, and understanding why the pullback is happening, what got priced in, and moving forward, how it can look based off analysis ratings and the overall market conditions. So it's a great time to start watching it. But before we look at that chart and go into more detail about it, I want to share with you guys the opportunities I mentioned this morning over at the Discord. And if that's something that interests you and you want to become part of, you're more than welcome to join us. The link is down below in the description to the Discord. And by joining, you'll become part of a growing community of investors, all looking to learn and grow together. So here we are with the 2 stocks I mentioned this morning. And the morning in the pre-market was looking a little bit choppy. And ARDX is one that I started watching, and TAOP. Now, TAOP had a small jump of about 5 to 10% at the dip at the opening bell, and then it ran up and then collapsed throughout the rest of the day, giving small jumps of about anywhere from 2 to 5%. It wasn't such a great performer. Now, ARDX was a little bit different, and it was a very subtle, slow upward trend after dipping after the bell, right? Started watching around 181. This is when I mentioned it in the pre-market, jumped up, pulled back down, and hit right here lows of 176, and started to run up, pull back down, run up, and then it spiked and hit a high here of about nearly 191 to 192, a highest point of 10%, guys. 10%, almost 11% plus. So this was one of those regular expectations on a regular day, 5 to 10% for me. 10 to 20% is a great day, and 20% plus is a home run. So this gave out regular expectations, and the other stock as well that we were watching this morning, which was TAOP, was a regular expectation as well. Very volatile. Had my stop loss put in. If it executed and I got kicked out, it is what it is. But this did move for about 30 minutes in an upward trend, presenting itself as an opportunity, trying to catch the dips or anywhere up to the upside from that first dip of about 5 to 10% opportunity on the day. Now, if that's something that interests you and you want to become part of, and you want to know what stocks I watch daily and weekly over at the Patreon and Discord, you're more than welcome to join us. The link is down below in the description, and we look forward to having you join us. So here we are with the S&P 500 index pulling backwards to the downside, and the cool thing is that there's stocks pulling down with it, and that's what's pulling it down anyways. So one of the stocks that got pulled down because of that reaction and after their earnings was PINS, Pinterest Inc. This is a stock that is actually right now in great territory to start being watched and a great opportunity to do more due diligence on it. Now, it fell really fast, and there could be two things that can happen. Today, it went from 56 to 61, so it could actually continue to spike up and then cool off again and kind of find a consolidation at this area and kind of create a support at $56, or it can do like an upward trend and at some point come right back down, and it will be very interesting to watch between those areas and those levels and $56 to see if it goes any lower. So I'm definitely going to be watching this one carefully. This is not a stock that I'm like in a rush to jump into or anything, but when you zoom out and you look at things from a bigger perspective and a broader perspective, this stock already fell once really fast after the last earnings all the way down to $54, and then it took off to 81. So this was a dramatic effect really fast. Could it continue downwards? That's the question. The next support I would watch is between $56 and $53 and $54 to see how it reacts. And if it ends up anywhere below that, it might be an opportunity, just like how it's reacted in the past. Last earnings as well went upwards, then collapsed, then it ran towards the next earnings. It started to fall towards that earnings and so forth. So this stock is pretty volatile every time earnings has came, especially the last ones since 2021 and moving forward. Because last year it kept pushing up, and this year it's been a little bit on that seesaw action, right? Up and down roller coaster ride. So it might just be an opportunity what we see here, and if it goes even further down, an even bigger opportunity. So as always, this is not financial advice. This is just me enlightening you guys on the opportunities that I'm watching, why I'm watching them, and what attracted me to them. Do your own due diligence, do your own research. Thank you guys so much for watching, and let's make some money.